Hey everyone, welcome to another video. Today I wanted to go through a trade I took on Tuesday, which was at all-time highs, this short here. I want to try and make this a bit of a faster video, so I just want to go through all the confluences that were available from all the indicators to take this trade, along with some entry confirmation. So you can see here I've got the list of confluences. We had more with some nice high probability open retests. SEIZ, we were pushing external highs across the board. HIPA, we had a lot of downside targets with good probability as well. MERA was obviously at extreme premium, but it had some other interesting things to show as well. And then I'll go through the entry and what the target was. Okay, so firstly, let's start with SEIZ, which is our statistical internal and external zones indicator. So as a lot of you know, that plots the percentile zones for how far price is likely to go. And in this case, we're pushing external highs across the board. So you can see in the dash here, we're lighting up red, which means we're getting into quite high percentiles across all the time frames. Now, given that we're at all-time high, it's a pretty tricky spot to trade, as there's nothing really to go off from the left side of the chart. Like there's no points of interest or highs to be swept, because there's nothing there. We're pushing all-time high. So it's a good idea to focus on then the higher time frames in this case. As we've already gone external, daily and weekly, you want them to start hitting higher percentiles before you start looking for shorts in this area. But how, I guess just quickly, how candles work, the reason why I've put these here is just to show you that when we're pushing external highs on a high time frame, the high time frame is not the one that changes first. The low time frame changes first, right? So that the low time frame forms its pivot high before the high time frame does. Okay, so you'll see here I've drawn these lines: previous day high, previous 4-hour high, previous hour high, previous 30-minute high, and you can see as we go down in time frame, we're sweeping, well, not sweeping yet, but we're going external to the previous interval's high, okay, as we're getting higher and higher and higher. So what's going to happen is eventually we're going to get to a point where these low time frames start to not do that anymore and start to break down, which will form this cascading effect, whereby the rest of the high time frames follow suit and they stop breaking their highs, and that's when you get a nice short. Okay, so here you can see we have just ticked over the daily median external high, okay, shown here. And across the board, we're obviously red. We are still in, so this 2 a.m. vertical line here is the start of the 4-hour, okay? So we are still in this 4-hour interval, the 2 a.m. interval, and we're pushing the 75th external high, which is a really good spot. That means that there's only a 25% chance that this interval is going to get much higher. It obviously still can, but as we go up, we're getting less and less likely that we're going to go further in this 4-hour. And we still have about an hour to go, okay? So very soon, it's likely that this 4-hour is going to at least form its high and form a bit of a wick. Even if we come down and keep going up in the next 4-hour interval, this 4-hour interval is likely to form its high soon and start to come down to form its top wick. Okay, next up we have MERA, which is our multi-time frame open retest extension indicator. Okay, so this is giving us multiple time frame opens, like candle opens, which have a probability to be retested by the end of their interval. Okay, so you can see that where these labels end is the end of that interval. So the 2-hour here, that candle finishes here. So there's a 66% chance that that gets retested by the end of that line. Okay, so these bigger time frames obviously have longer to retest their opens, but you can see we're pushing quite high on the extensions, percentile extensions. Okay, this 10-hour has a really high probability to get retested. Obviously, it's got a long time that it can do it, but we're already up over the median, the 50th percentile extension. So that's starting to look good to short down to these targets. Now, the reason I like more as a I guess alert to get into trades is because of the logic behind how candles how candle highs and pivot highs and lows form. So, which is similar to what we just spoke about with SEIZ, how they keep breaking highs on timeframes. But excuse the drawing. But if this is our previous candle, okay, and we've closed, let's imagine we've closed here. So the next candle is going to open, and what we want it to do is start to go up to take out the previous high, okay, and not leave much of a wick down here, okay, to then form its candle wick high, to then come down, retest the open, and hopefully continue further to create this candle's body and then its low wick. Okay, so if you imagine this is now looking like this, okay, which is what we're going for. But in order to do that, you first need to try and get in within here, okay, to get this expansion down. And to do that, we're looking at taking out the previous high, which in that logic, we're taking out liquidity. And then we can look to get into high percentile zones and target the open. Okay, next up, we've got HIPA, which is our basically our liquidity indicator. So it's telling us when we've taken out external range liquidity and when we've got some nice internal range liquidity to target. So you can see here all day we've just built up liquidity and we haven't taken any of it out. So we've kept building, and all these lows have quite a decent probability to be taken out by the end of the day. So CH means current hour. So what this means is that these lows from this current hour have let's take this one for example. So there's an 82% chance that from the current hour, this level gets taken out by the end of the day, end of the trading day. Okay, so these automatically adjust with some time decay. As the hours go on, these percentages will go down because you've got less and less time to take out these levels. But it's really nice to have, I mean, this is a super clean day where we've got all of these levels lining up in one direction, which gives us a great bias to the downside for when we're trading at some key times to come and take this out at some point. Here we have MERA, which is our multi-time frame extreme range alerts. And this is basically telling you, making sure that you're trading within extreme premium across multiple time frames, across multiple higher time frame candles or extreme discount. And it's also starting to give you some multi-time frame alerts of when we're up in these areas and you have the confluence of all the other statistics when we're starting to break down. So these arrows will tell you on the current time frame when we've started to break below candles and close below them. Okay, so they're an early warning alert. They're not a enter a trade immediately alert. This is to try and start to tell you when highs could possibly be forming. These boxes here, you can set these to any higher time frame. I've actually got it set to the 5 minute. And just to show you what it's doing, over here, these are 5 minute candles. So this 5 minute candle low as the highest candle here, we've now closed below it. Okay, so now I've got a red box because we've closed below that. So the same way I spoke about with SEIZ, how we were breaking highs and eventually we're going to start to break down. In order to break down, we have to start breaking lows and closing below lows. That happens 100% of the time with a pivot high, okay? It has to start doing that. If it doesn't start doing that, if we just start breaking lows and not closing below and just wicking, we're likely probably going to go back up, okay? So we want to start to see lowish time frames like 5 minutes start to break down, so that we have a bit more confidence in that things like the 1 minute or even the seconds time frame are also going to break down and not just be faking out and a pullback. Okay, so here you can see we've broken down on the 5 minute, and now what we're looking for is price to come back into that area, sweep some liquidity, and break down again. Okay, so as we've come up into these other previous ones where we've broken down, you can see we've retested, but we haven't started breaking down again. So come up, retested, but we have, like, this is now broken this zone. So we've come up and we haven't started to break down again. Okay, so this, now we're coming up. Okay, and what you'll see here in a second is that we start to break down again. Okay, next one is our Wick report, which is soon to be released. I'm still just building it and finalizing some details with it, but we've been testing it within the Discord and it seems to be working pretty well. So what we've got here, this is the daily Wick, and you can see it's only 0.04% in size, and it has a 71% chance of being exceeded by the end of the day. So that means that the daily Wick is likely to be made bigger than what it is. And in order to do that, it has to come down and break the size it currently is before it can form a larger wick. Okay. So the theory behind this is that if we open and only create a small wick and then just go up all day and obviously create all that internal range liquidity with HIPA as well, that we are likely to be forming the wick high and finding the high point before creating the body and then coming back and creating a larger wick. Okay. Okay, let's go over entry confirmation. So I've just drawn a little line chart here just to show you what I'm seeing within these candles. Okay, and importantly as well, we're around the time of a new hour. Okay, so a new hour is opened here. And I know based on the time data, which you can see in the Discord as well, that the extreme of the hour is made in the first sort of 10-15 minutes of the hour. Okay, so this is a good point to look for entries. So this line chart here is showing what I'm seeing in these candles. So we're coming up, we've got these wick reactions, so we're coming back down, coming up, wick reaction back down, coming up, formed our pivot, coming down again, reacting to something from in here. Okay, so I call this demand, and that we're reacting from the demand here, but you can call it support or whatever you want. So reacting, and then we're breaking that support or breaking that demand before the pivot high. Okay, now we're starting a new hour. We're coming back up and we're sweeping all the internal highs within this range to the very last point, which is what I call the IR, the initial reaction. So you can see here, after the pivot high is formed, we come down, we have that initial reaction to support or demand before we then break down. Okay, so what you'll often see, this happens very often, is that price will come back and take out that IR whilst mitigating something in the very extreme candle that is previously unmitigated, holding that, and that's when you start to see supply zones holding and taking control over demand. So then to confirm that again, I'm looking for a candle close below this highest pivot candle that we've got here. Okay, so we get that. So then as this price was coming back up to retest in here, that's when I entered. Stop above this high, because that's what I'm considering the invalidation for the idea. If we break this high, then I have to look for another entry model all over again. Here's the result of that trade playing out. Just going down to that daily wick. A really nice trade, not too many deep pullbacks. All the way down and exceeds that original daily wick. And that's it. So I hope that was helpful. Just a final point, you don't have to use my specific entry model, you can use your own. The point is that you're seeing that we've got bias lining up in the same direction from several different statistically powered indicators. So that's what you want to see. And then you can use your own personal confirmations to basically go in a directional bias that has overwhelming stats in your favor. So if you want to check out those indicators, head on over to levellogic indicators.com. And if you've got any questions, leave a comment below. Thanks.